Ladies and gentlemen, good morning. Let us very quickly review the week, starting as always with the short end of the US curve. This is the weekly chart of the euro dollar. As you can see, it has done absolutely nothing. 1 or 2 basis points higher in price, lower in yield. As Janet has very kindly instructed us that there will be no rate hikes over the course of the next couple of months until December. The 2-year note has done exactly as we predicted. It touched 109.00 and then rallied significantly and is now stuck in this range, where we would say the maximum upside is 109.14 and more likely to trade around 109.07 for the foreseeable future. The 2-year note now becomes the anchor of the yield curve, and everything else basically trades around it. So all we have is basically a movement of the yield curve from now on. We would expect the 2-year note to be very much stuck around the current levels, 109.06, for the foreseeable future, certainly for about a month, which then gives us various possibilities for the 10s and 30s to trade around it. And we would suggest that the movement is going to be inspired by presidential politics. The more Trump does well through the presidential debates, the more the 10-year and the 30-year will trade back towards, this is the IEF ETF, the more they will trade back up towards 112, 113 area and close these upper gaps. And the more Hillary does well, the converse is true, and the market will fall back down towards the 110 area. The same can be seen even better in TLT, and we have here the possibility of moves back up towards 140, 141, 142 on squeezes, and moves down towards the 132 area on or even lower if Hillary Clinton does better than Trump. We would definitely argue that any presidential election forecasts which put Hillary Clinton ahead are bearish for the long end of the bonds and short-term bullish for TLT is a Trump better results in public opinion. If Trump were to move significantly ahead of Hillary Clinton, we think the major beneficiaries will be the TLT and the dollar. The German curve, on the other hand, is looking quite bullish insofar as the 2-year note just keeps on going up and up and up and making higher highs, where we wouldn't be surprised to see it trade all the way up to 112.20 over the course of the next few weeks. The more the US presidential politics gets uncertain with Trump, should Trump move ahead, you will see a flight to quality into Germany with higher and higher prices in 2-year notes all the way out to the Bunds. Unfortunately, the Bund chart is skewed by this is the daily chart, it's skewed by the rollover, but we certainly wouldn't be surprised to see moves all the way back up to 168 in Bunds, the more uncertain the US politics becomes. So we are certainly bullish for the European curves, and we think the major beneficiary is the German market, with flight to safety all the way up towards 168. The BTP, on the other hand, and this chart is again skewed by the rollover, has much less of an upward potential. And we think that the more uncertain presidential politics becomes in the States, the more the spread between BTPs and the and bunds will go out further and further. This can be quite well seen in the yields chart. You can see how the yield of BTPs is now stuck at the previous highs, while the Bund has done something quite different and has bust those previous highs and is now testing the previous lows. So we would argue that any uncertainty is certainly Bund positive, BTP negative over the short term. In our opinion, the market which will be impacted most by presidential politics is going to be the dollar. We have these tram lines which have worked quite well all year, around 94 on the downside and 96.5 to 97 on the upside. The market has respected them many times and is now stuck firmly in the middle, waiting for the first of the presidential debates. If Trump should start moving ahead and perform better than Hillary Clinton, then we would not be surprised by a test of the 94 level in DX. And that is going to be very significant development for all the other stock markets and for interest rates. It is unlikely that the dollar can go down if TLT and the yield curve in the States is moving significantly higher, so TLT lower. Therefore, that is why we think that with a Trump good performance, we will get the dollar moving down through 94 and testing this trend line all the way below 92, and we will get a flight to safety into bonds, and we will get a move lower first in equities, but we will see in a second that we don't think that move will be sustained, certainly not in the States. It is quite amazing how the markets converge to a point in time to coincide with major political events. We have here a daily chart of gold, and it is at a very important juncture. It will now either bust straight through this uptrend line and come down towards the 200-day moving average, which is around the 1240 level, or it will break this structure, which could be called a bull flag, and go significantly higher. And this naturally absolutely fits in with our view of the dollar. If DX now starts busting on the downside through 94 towards 92, we would expect gold to be significantly higher, busting through this down flag and going towards even 1500 in the next few weeks. Moving on to equities, we would maintain quite a neutral to bullish stance on ES, simply because we think that even a Trump victory, let's call it, or anticipation of a Trump victory, is not going to be as bearish for ES as for other equity markets, simply because we think that the dollar and TLT will absorb the shock more than ES will. Will ES move down towards the 200-day moving average, below 2100? Yes, it will, but we think that the moving average will hold it. Again, that is because with the cheapness of if the dollar gets 3, 4, 5% cheaper, and if TLT moves back up towards 142, that will act as a natural shock absorber for ES. Just as a much lower dollar in percentage terms will be a shock absorber for ES, it will actually be a huge headwind for the Stoxx 50. Again, crucial positioning. We have this downtrend line coming in, and we would not be surprised to see the Stoxx 50 move all the way down to the lows of Brexit and before, while the ES is much better supported. So we think that any shorts should be concentrated in ES, which makes sense because if the euro is rallying, the discounting factor for the Stoxx 50 will be much lower, and therefore we need to be selling Stoxx 50 rather than ES. Much the same thing can be said of the Nikkei. The Nikkei is right at the 200-day downward sloping moving average. It could be argued that the Nikkei will be the biggest loser from a Trump victory. Trump keeps on talking about Japan and how they manipulate their exchange rates. If the market becomes totally convinced of a Trump victory, we think the Nikkei, together with the Stoxx 50, will be the biggest loser. And we would not be surprised to see the Nikkei considerably lower, certainly testing the 15,000 level. Naturally, the reverse is true. If the more Clinton pulls ahead, we think the more the Nikkei and the Stoxx will benefit rather than ES in itself. The stronger the dollar, the bigger the headwind for ES, and vice versa. So we think that the real volatility is going to be in Stoxx and Nikkei rather than in the American stock market. With the valuations of ES, which are current, we see it very, very hard for ES to break through the 2200 area. We think it is basically doing another one of these periods where it breaks down on bad news and trades towards the 16-time Blue Angel, and in good periods it trades up to the 17-time Blue Angel, which caps it. So we think for the time being we are stuck between a 2200 and call it 2080 trading range. We would be sellers above 2180 up to 2200 to get short, thinking that we'll definitely be able to buy it back several percentage points cheaper. But we certainly think it is worth going long of ES at a 16 times Blue Angel, because it's always caught it very, very well, certainly on even on a spread against the Stoxx 50 or the Nikkei. The upside of ES is further limited by the sectors. Consumer discretionary, very little more upside, as you can see from the chart. Consumer staples could rally somewhat together with TLT, but this is a defensive posture, which indicates that any up move in ES overall is going to be small. We still think that energy is just a very high gamble. Yes, you can make a lot of money, but you could also lose a lot of money, so we leave this sector alone. Financials are very much constrained by the Blue Angel 14 time line, which it has never significantly broken for any length of time. Healthcare, which is a defensive sector, could rally, and we still think there is there is juice in that one. Industrials, well, the upside is quite limited. And finally, information technology still could rally quite strongly, another 5-6% relative to the ES, and take us up to towards that 2200 area in the S&Ps. Everything else is fairly close to the top of their trading range. Materials could go up another 2 or 3%. And finally, telecommunications probably have another 4-5% on the upside, which altogether gives us a 2 to 3% upside in the ES, exactly where we said that the upside should be, the maximum upside around the 2200, maybe 2210. So we are quite happy to short it at those levels. So here are our biases for next week. The Bund BTP spread around 120 basis points. We see that one going much further out, whatever happens. Should there be a surprise shock and the ES breaks down, we think the 2075 to 2085 area will hold it with a tightish stop around 2060, and really shorts above 2180 all the way to 2210. In the Japanese yen, we like the 95-96 area to buy some long-term calls, and the presidential politics surprises page basically tells us that we would not be surprised by squeezes up to 41 to 42 in TLT, and to watch the downside in DX and basically be ready to sell heavily weekly closes below 94, and to buy gold if that happens. ES, we think, will be damaged the least by Trump and presidential politics, because DX and TLT will act as shock absorbers. On the other hand, Stocks 50 and Nikkei will have no shock absorber, and they might actually fall apart much more than ES. So if one wants to short the stock market, we would argue that the Stocks 50 and the Nikkei are much better shorts than the American stock market. Thank you very much. We will tweet all of next week what we are doing. We think it could be an exciting week, especially for the dollar and for gold, and we will be updating you as our views change throughout the week.